Welcome to my channel. I'm Dr. Romano. In my previous video on May 27th of 2022 called Wealth Creation with Market Timing, in that video I go over the actual cycle and what to do, but in this video I'm going to dig deep into timing the stock market. In this video, I will discuss the best stocks to buy when the stock market collapses. You don't want to be a day trader. You're not a hedge fund trader. You're not an investment bank trader. You're simply just a typical person like you and me, let's say, and you want to know when to buy stocks and when to sell them, and you want to hold on to them. Well, that requires market timing. And so once the stock market does collapse, pretty much it's about to collapse. We're going to have a lot of bad days, bad months that are going to go down and up and trade sideways, etc. But it's just a change of our markets, and it's quite normal. There's no one to blame. Okay, this is all called a market cycle. In this video, stock market is the most important, and that's where you could really gain a lot. Because with very little money, you could purchase stocks. You just have to know when to buy them and when to sell them and which ones to buy. But after the stock market collapses, you want to go in that week. Literally, that's when you want to enter. And that's the only time that you should actually buy stocks. Unless you're a professional, a hedge fund manager, or let's say a financial trader at an institution, or you're a day trader and you have a track record and you're doing pretty well, you should never ever enter the stock market to buy stocks, okay? Because it's a very risky type of investment. However, if you enter after the stock market collapses, you can't lose because everything's dropped so much. Here's the stocks and the type of companies that you want to invest in. You want to look for stocks and indices that are highly affected by a slowing economy, meaning that they fluctuate in prices because of the economy. That's up to you. I'm not going to go through the list, but you have to think about, well, if there's a stock market collapse, that affects the real estate market, right? You could focus on companies that supply the real estate sector, etc., like furniture companies, household renovation good companies, you name it. This coming collapse and this whole next decade, 8 to 9 years, is very different, okay? Because we are going to have a transition of having products made outside the country for those products to come back into the country. And so you want to stay away from the commodities market because iron and steel and anything that you need to build, that's going to do pretty well. And that's why Warren Buffett, approximately 2 years ago, he's been buying up steel companies. Why would you buy up steel companies now? Well, he knows what's going to happen. That's where you want to be. You want to focus on companies that, again, are very and highly affected by a real estate collapse, a stock market collapse, that they fluctuate in value. When the market starts to do good again, they go up, and they go up high. And then, of course, that's when you want to sell, and then you want to repeat the cycle for the commodities market. 2 years before the stock market collapses, approximately when you start to hear everyone's flipping houses, that's probably 2 years prior to a stock market collapse. And so that's when you want to sell your stocks. Before we continue the video, please remember, if you want to say thank you because you really like these videos, please do thumbs up. That's this icon on the bottom of the screen. Thank you so much. I know it takes time, but it's very important. And you don't have to worry about sectors like the pharmaceutical sector, etc. No, you want to focus on companies that supply the real estate sector. Because if there's a stock market collapse, are people really going to be building houses to the extreme? No. All those companies that supply that sector, they're greatly affected by that. Not roofing companies that make roof materials. Stay away from that, because there's always renovations that are being done. We have storms in certain parts of the US. They always seem to make money. But I'm talking about like when you buy a house and you want to renovate it. You have to also remember now that you have interest rates that are increasing. So you're going to have to put more down payment to make your mortgage affordable. What does that mean? It means that you're not going to want to borrow too much money or borrow extra and start redoing your house as soon as you buy it. You're going to have to actually wait a while. Now, of course, some people have extra savings and they could afford to do that. Even those people that do have a big savings, they're not going to want to put all their assets into the house because they need cash in their savings account or in their investment account just in case they need to pay their mortgage in the future. So that's called risk management. So you should have some cash that you don't touch, that you could basically pay your mortgage for 6 months. And if you lose your job, at least you have 6 months savings to pay your mortgage payments until you either try to sell your house or you find a new job, etc. You're not going to want to spend that money on interior renovations because it's dangerous. You don't, put all your money into the house as a down payment, and then you can't afford a payment, and the house takes, you ruin your credit, or after a certain amount of months, they take your house away. So you don't want that. The important sectors to focus on that have nothing to do with the market cycle is, if you not focusing on what I'm talking about, but there are really important companies out there that are highly affected by a slowing economy. The reason why I say focus on stocks that are really affected by a slowing real estate market is because when you're entering the actual stock market to buy those stocks and those companies, you're buying them at the lowest. You're buying them at a time when it's going to be really bad. When you enter that portfolio, you must remember that it's going to take a while for you to make your money. Literally, it could go down further, but that's okay because you're going to hold on to them for quite some time. Some actually have dividends that you can take advantage of and some don't. But because you're buying it after a stock market collapse, the prices are so cheap that you just wait a certain amount of time and then you sell it. How long would it take? Well, I would say 6 to 7 years. Because from the stock market collapses, let's say, right, you have 8 to 9 years for the cycle to finish. And you should have also invested, you should have sold your stocks and then invested in the commodities market and then wait for the stock market to collapse. And then you sell 2 years after the stock market collapses your commodities portfolio, and then you repeat it, all right? I want to thank you so much for watching. If you like my videos, please remember to subscribe so you get my future videos. Please, if you want to say thank you, do thumbs up. That's that thing that looks like this. And then finally, please share my videos with at least 5 people so that other people get to learn this and they get to take advantage of this free information. If you want to create a dialogue, if you have any questions, send me messages to the live chat and I'll make future videos just for you, or I'll actually answer your question directly in the live chat. So I want to thank you so much for watching.